Welcome to the 2025 Economic Depression and Preparation Channel. Thank you for joining me on this brief Sunday edition, March 23rd, 2025, as we head to the final week of March here almost, and we get into April. Things on this economy starting to slow down. The good news is the economy is still working. It hasn't completely broken. Everybody's still moving goods and services. And things of that nature, so that's the good news. But there are showing signs of weakness here. And as you know, the Federal Reserve meeting on this past Wednesday allowed for the rates to be unchanged, just as I predicted, and just as many others predicted as well. And now we're seeing some slip-ups here in terms of what's happening here. The markets are kind of nervous because they don't know when the two rate cuts, supposedly, allegedly, the two rate cuts that are happening this year. Nobody knows the timing of that. Will it be June? Will it be September? Or will it be even later in the year when these rate cuts come? So CNNBusiness.com had this article to say here, and this is the first time that the rates have left unchanged in a while as they were trying to head toward their 2% target, as you know, quote unquote. Now, we have to remember that rate cuts are not the only policy toolbox that the Federal Reserve Bank uses. They also can influence the money supply by either increasing the money supply or decreasing the money supply and buying bonds, buying and selling bonds, or buying and selling debt or derivatives. That's another 2 or 3 ways that they also influence the U.S. and world financial markets in tandem. And so let's continue to remember that the interest rates are not the only thing that's going to be dictating this. There could be shocks to the system in terms of some kind of stimulus or austerity measure that could happen either indirectly through, say, a Doge department. I know there were talks about stimulus or something like that later on after the summer if things get worse, especially if unemployment goes higher than expected. And you have to remember, these data that they're getting is still like a month or two behind what's actually happening on the streets of America. So let's remember that too as well, ladies and gentlemen. So because of President Trump's tariff policies, and they want to get the data on that because many countries are meeting, like China and Russia and Japan, they're meeting together to figure out what to do with, how they're going to, in Canada, how they're going to, are they going to raise tariffs in competition, or are they going to compete with this trade war that's going on, kind of semi-much trade war. So many people believe that the President Trump especially said that the Fed should reduce its benchmark rate as tariffs roll out. They said, quote, the Fed would be much better cutting rates as U.S. tariffs start to transition with ease their way back into the economy. President Trump wrote on Truth Social, calling April 2nd as the deadline when reciprocal tariffs are expected to go into effect, quote, Liberation Day in America. So we're just about a week and a half out from that. And, it remains to be seen. Obviously, they're leaving rates unchanged. So it remains to be seen. Unemployment right now is at 4.1%. We know that real unemployment, ladies and gentlemen, is at really 10%. And underemployment, another key thing is underemployment. Many Americans are working 2 or 3 jobs, either, one main job and 2 side hustles or a combination thereof. Underemployment is at 12% in America. And so we only added 151,000 jobs in February. March numbers come out this Thursday, so we'll see what happens this week with the jobs. What do you expect? I don't think we're creating jobs. I think we're more so just reshuffling or reassigning positions based on the technology, the AI, and different things like that have been, our jobs that have been furloughed, stuff like that. So it's more of a reassignment than creation. But in any event, I expect that number to continue to be lower. So this Thursday, I predict job growth numbers will be somewhere around 130,000, 120,000 to 130,000 jobs created. We shall see. Let me know in the comments what you think. But S&P 500 ekes out a gain on Friday, according to CNBCBusiness.com. This snaps a 4-week losing run. As you know, that the S&P 500 was going up and up and up last year. Now all of a sudden, now we're on a kind of a moderate run here now as numbers come down to more reality. However, we know that the S&P 500 and NASDAQ and the Dow Jones is all overvalued by at least 40 to 50%. And so we haven't seen any real correction yet like we did back in 2008, 2007, 2008. But that is coming, and many people know that. And so many investors are trying to shuffle their money around, trying to figure out where can they get the best bang for their buck. Is it gold or silver? Is it crypto? Is it bonds, T-bills? Is it, so people are moving around thinking about that. Especially those who have been in the game and the money game for many, many years, long years. So that's something to think about. So the stocks close out the week in the green. S&P 500 moved up 0.08% higher to close at 56.6756. NASDAQ Composite jumped up about half a percentage point to 17,784.05, and the Dow Jones inched up 32 points to settle at 41,985. So it's still above 35. So it's still above 40,000 the Dow Jones, but stocks are still in trouble. Americans, quote, hate inflation. This is according to MarketWatch.com, but it's not going away anytime soon. Duh. Tell us something that we don't know. Everybody from the West Coast to the East Coast, Midwest, Southwest, America's heartland, everybody in between knows that inflation is not going around. It's just shuffling. It's going to be just shuffling different departments. So one month you may have food prices continuing to go up. Next month you may have your electric bill or cable or gas or, water bill go up. And the next month behind that you may have your homeowner insurance go up or some other kind of crazy bill, car repair bill go up, whatever the case may be. This number is not getting the 2% inflation. That world is behind us. We're never coming back to that. Just like mortgage rates are never going to be below 3% again for a long time until the housing market corrects, which is still a little ways out according to many people. So it's here to stay. That's the bad news. Many people have said stagflation could be coming. That's possible, but I think more so we'll be heading towards hyperinflation and then a massive deflation. But by the time the massive deflation, the fire sales happen, only the rich, the super, super rich, of course, will have all of the dough, and they'll just buy up everything and turn us all into renters, for the most part. And we'll just won't, have a chance to own anything eventually. That's what everybody knows we're heading towards. And so with the outlook uncertain, USnews.com was reporting that the Bank of England joins the U.S. in holding rates steady. Okay, so it's very interesting because now you have the ECB, the Bank of England, United States, Canadian Bank, a lot of other banks. They're going to follow what the U.S. does, Federal Reserve does, and rightfully so, as the U.S. is one of the largest economies, obviously, in the world. So this is going to spell trouble for not just the U.S. markets, but the world markets. Everybody knows that England's economy is struggling too, and also other countries in Europe, Germany, France, Romania, the economies are kind of stagnating. And also in the Asian markets, their economies, Chinese economy, yes, the middle class is growing in China and they have a little bit less, but they're struggling with a lot of recessionary trends as well. And so this is going to have reverberating effects around the world. Holding these rates steady, no stimulus, no wage increases for those workers who are working, making a decent wage. They're not getting a wage increase, but the cost of living is going up twice as fast as the wages are going up. So everybody knows that $100,000 30 years ago used to be, decent money. It still is today, but it doesn't go as far as it does, as you know, in a lot of these countries and a lot of the G20 or G8 countries, developed countries in the world. And so that's by design. So right now, they're going to hold rates steady. And like I said, I predict they're going to hold, both of these banks are going to hold rates steady throughout the summer. So don't even look for a rate cut until possibly August to September time frame. That'll be your first rate cut. And this rate cut is not going to be anything big. We're talking 25 basis points that may not even do anything with the fact that inflation is going up, unemployment's going up, and also debt is going up. So that's a triple-headed monster that we have. Debt, inflation, and unemployment all are going to be going up throughout the summer. It's just going to create a mess. And so that's why even President Trump said that we're going to feel some uncomfortableness. And you can interpret that how you want, but I interpret it as being a slowdown. And, maybe not a total collapse. I'm not going to say it's the end of the world, no, but there is going to be a slowdown, and this slowdown is going to last throughout the rest of this year. And this year is pretty much, even the economists are saying that the growth of this year for Americans, 1%, if that. So it's basically going to be stagnating, just kind of shuffling things around. And, the great news is like I said, things haven't collapsed totally, and we're still gaining in terms of they're still building and investments in tech and AI and robotics. So hopefully if people are into that, or young people that are in college and studying that, or even those who are not in college, maybe they can get something in tech, AI, robotics, possibly some other fields that may be growing, to kind of mitigate the damages that we're going to see in terms of some jobs that are just going to be eliminated completely due to AI or due to just straight up cutbacks because companies want more for the profit, the shareholders, and that situation. So let me know what you think in the comments. Have a great weekend. God bless. I'll talk to you soon later on this week when we get the jobs numbers and other reports that are going to be coming out, earnings reports that are coming out as we close out the first quarter of this year, March, and head into the second quarter, April, May, June, when we get into the all important numbers here very shortly. Take care.